Right, everyone. Hello and happy Saturday. Happy to have you here with us today at VCCDC. And we are taking you on the road to home buying. What does that start with? It starts with good credit. And what does good credit mean? Well, first, let me tell you who I am before we get started on our little trip today. So, I am Francine Casson. I am a homeownership specialist here. I am HUD certified, so I do work with families, individuals. I help them with all kinds of things regarding credit and helping them on their pathway to home ownership. I do enjoy helping people get on the road to home ownership and helping them be successful with their finance. So let's get this party started. And what is credit? So for some people, credit can be a pain. For some people, credit's a really good thing. It's helped out. And for some people, it's something in between. They're not really sure how they feel about it. So let's go over that for a little bit. So credit is granting the money in exchange for a promise. So that's the legal definition of what credit is. If you look it up in the dictionary, that's what it's going to tell you. And what does that mean? It means that you can go and buy a couch and they're going to give you the couch before you pay it. And they're going to allow you time to pay it. And you're promising that you're going to do that. Also with leasing or buying a property, you're going to go to a property management or you're going to go to a bank and say, I would like to obtain this property. So if it's a lease, well, they got to make sure you have the ability to pay. Same thing with purchasing a home. Got to make sure we feel good about giving you $500,000. Opening bank accounts, establishing utilities, things like that. You have to have some credibility for them to give you these things. And they have to feel good about you paying it back. So why is credit important for home buying? So there's a few myths about it. There's some things on the internet. And it's important for home buying because it determines a few things. So obviously, the better your credit is, the better the interest rate. The better the interest rate, the more home or the better deal on your loan you can get. And when you get into lending, they'll discuss that a little bit more. But it's really important to have that solid credit score because one, it tells the banks you know how to manage credit. It knows how to manage money. The other thing is it lets people know your ability to pay. It's like when we do our home buyer class, I tell people, everyone can go buy the Sentra, but do you want to pay $500 for the Sentra every month or do you want to be paying $200? And your credit score determines the ability to pay. Now, what we have are just preliminary information like for conventional loans, which are your basic loans, are 620 is a minimum credit score that they're looking at. FHA, which are your government insured loans, 580 is what the government is saying. Look, at least a 580 score. If they have a 580 score, you can talk to them. Now the banks have their own overlays. So basically things that they want to ensure that they feel good about giving you all this money. VA doesn't really have a set standard. 580 is what they look at, but they also have some overlays because there's a lot more leniency in those loans compared to the FHA and conventionals. There's other loan products, other rules with those loan products, but this is just some basics. Don't want to overwhelm you too much and get you started. We just want to get you started on the basics. So scores for you. So where do you find these scores? Where do they come from? Experian, TransUnion, and Equifax. Many people use apps. So you may have Credit Karma, you may have Wallet Hub, you may have something from a credit card company. A lot of them have score tracking kind of devices. Sometimes your banks will send it to you. And those are scores that they use and review. So just know that the way a score is calculated for a credit card is not the same way a score is calculated for a home loan. But in the very basics of knowing what's on your credit and information, this is where you would start with the bureaus. So what makes up your credit? Now this pie chart comes from FICO. FICO is one of the companies that sort of helps calculate the figures and creates the math. So the biggest thing that they look at is payment history. If you have a lot of late payments, things like that, why are you always late? If your payment's $25, why are we always struggling for that $25 payment? The other thing is the amounts owed. How heavy on credit are you? So if you have a $500 credit card, you shouldn't be carrying a balance more than $150. That keeps you at the 30% range. When you start carrying more than that and you're not paying it down quickly or within a certain amount of time, it shows your credit heavy. And the banks look at that like, why are we so credit heavy? Things like that. New credit, length of credit is some because some people don't establish credit right away. Some people take time to establish credit simply because they're not interested in credit. It never came up. They were in school, so credit wasn't really applicable. Varying reasons why people don't establish credit right away. So credit history isn't too much of a factor, as are payments and the amounts owed. Those are the two big things that lenders look at when they're talking to you. So what we're going to do now is we're going to take some time. We're going to see a little Hollywood magic right now, and we're going to look at a credit report. We are going to look at a credit report. So give me a second here to bring it up so we can see it. So hopefully you guys can see it there. Let me make it a little bit bigger for you. Little Hollywood magic here for everyone. So let me make it full screen. And let me make it a little bit bigger for you. There we go. And start with our first page. There we go. All right. Thank you for the little writing it out with me during the transition. So this is what a credit report looks like when you go to a place. When you come to us, whether you go to Bank of America, this is about what a credit report looks like. So we're going to go through it one by one, and we're going to discuss what these things mean, because this is very overwhelming. There's codes and words and things, and it's just like, what are they talking about? So the first thing that they look at, this is what the report itself looks like. This is what the report kind of looks like. This is just a example that they've provided for us. The next thing that's important is, this is all the company information. So whoever pulls the credit, stuff like that, this is what this information is for them. This is important. This is your information. So it uses your name, your legal name, not what you tell people. This is your current address. So whatever address you've been reporting, that's what it uses. Social security number, date of birth. And if it's a joint credit account, you will see applicant 1 and applicant 2. So if it's a couple, if it's a brother and sister, whatever it is, if it's two people pulling credit together, you will see, but today it's one person, just to make it easier for you. So the next thing we look at is right here, summary page. And this sort of tells me, tells the lender, tells everybody what is going on. It is sort of telling us what's happening here, what's going on. Now this part here, I'm going to jump to this and then head back into this. This tells me your lending score. So out of 3 scores, you have 3 scores. Remember Experian, TransUnion, Equifax. 706 is the middle score. So these are your 3 scores. This is the Equifax score, 765, Experian score, 706, and TransUnion of 692. So when a lender tells you they're using their middle score, they literally are using the number in the middle of the 3. This is the highest, this is the lowest, and this is the one in the middle, 706. So that's how they figure that out. So if you go and say, well, my Credit Karma is saying this, remember it has to be all 3. So let's go into this instant merge and let's take a look at it. So right here, if you notice under warnings, there's a fraud alert. So if you put a fraud alert on your credit report because your identity's been stolen, because something has happened, whatever the situation is, right away it lets me know. And that's important. So anybody will be able to see that there has been some fraudulent activity on your account. And it's important to have that. You are in control of that. In this case, it's an active duty alert. So someone who is deployed, obviously they're not pulling credit right now. So sometimes the bureaus will do it. So if you have a credit card, sometimes they do it for you. Sometimes a significant other will do it. And then it is for you to remove that fraud alert once it's been put on or resolve it. So what this is the instant summary. This sort of gives me a snapshot of your history of it. So in this particular one, you can kind of see what's going on here. This tells me the different types of accounts. And let me explain the different types of accounts. So real estate, obviously any property you have ever owned, been titled to, or you've been on the loan. So, if you co-signed for your brother for his house, I'm going to see it right here. Installment loans, those are your time payments, something you're going to pay over time, and it's a one and done thing. So like a car loan, student loan, personal loan, things like that, something you are paying over time. Sometimes furniture can be considered an installment account. Sometimes furniture can be a revolving account. It just depends on where you're buying it and how they have their credit set up there. But it tells me the number of accounts you have had or have. Tells me the current balances, shows me if there's any past due. In this particular credit report, there are no past due. It shows me the reported payments. So it tells me what the payment is. I mean, you may be paying more to it, and that's okay, but it's showing me what the minimum payment is. Shows me how many accounts are open, how many accounts are closed, and it shows me if any of them are in arrears. So 30, 60, 90 days past due. Revolving accounts. As you can see here, revolving. So those are your credit card accounts. So your Visa, MasterCard, store cards. So that is a credit account that you're going to use, pay, use again, use, pay, use, pay, use, pay. It's revolving, kind of like the door. So that's sort of how it got its name there. And it tells me how much you have there, balances, things like that. And it tells me how many are open, how many closed, any past thing. Now, when it says there, under all other accounts, that means a few different things. That means non-traditional credit. So non-traditional credit can be things like collection accounts, can be things like self-reporting accounts. So if you use one of those self-reporting things, you're reporting things like your cell phone bill, your utility bills. So if you use things like the Experian Boost, I will see those things there. Also, if you're renting, sometimes the landlords do report those rents to your credit, and it would report there under all other accounts because it's a non-traditional account. It's not a regular account. Tells me the total number of accounts, balances, sort of gives me a picture of what you've got going on and what you've got obligated debt-wise. And that's sort of what this summary tells me. And then over here shows me, inquiries that you've had, shows me your available credit. So you're not, this particular credit report isn't too some inquiry, how many you've had, any new trade lines you open, records. Public records is important to look at because that tells about bankruptcies, tax liens. Some states do report child support in the public records. So if you have those kinds of obligations, they do sometimes, but primarily what is in public records is usually any kind of bankruptcies, tax liens, or federal judgments. So if you have a federal judgment against you, I will see it there. Not all state judgments do appear on here. Some do, some don't. It depends on your state. So you'll have to check with your state at the time. Historical delinquencies just sort of shows me historically how you've handled and managed things, and kind of what's going on there overall. So sometimes what happens is people are always late, just can't really pay the bills on time. And then what happens is, we're wanting to buy a house, we're wanting to get things together, and we start, we start getting on track. So they kind of see that and they'll ask you like, hey, what happened? So what we're looking at here, we get it here. So this is sort of what they use to compile the scores. What are they doing and why your score is not at the 800. And as you can see in each of the squares, it's explaining why. So for Equifax, the first row, item number one, you can see because the amounts owed are too high. They're too credit heavy. The other thing is the credit limits, length of time, and the level of delinquencies that have been reported to that bureau. So that's kind of what they used to factor in on why you're not at the 800 mark, why your score isn't higher. For line 2, there's some public records, derogatory reports. There's some lack of, the ratios are very high. So those are things. And then number 3, of course, the derogatory public record, length of time, things like that. So these are the things that they use to calculate why your score was not higher. So that's kind of what they're looking at there. So right here, public records. Remember we said about public records, so the bankruptcy. So bankruptcies do stay on there for 10 years if it is a Chapter 7. So if you do file Chapter 7, know that it will stay on there. So whether you file it in California, whether you file it in another state, it's going to hang out for 10 years. It's across the board. Also, some judgments, as you can see, there's a tax lien, so those will show on there. Sometimes they do, sometimes they don't. Again, it depends on your state. In this particular case, there was a circuit court judgment, so that's why that is showing on there. Like I stated, not all judgments appear on the credit report. It just depends on the type of judgment, and that's something you can look into and see. So moving right along, let's see what else we see here in the credit report. So right here in the credit report, we can see, okay, 16, there we go. Yep. So we're looking right here at the history of payments. So this is what the report looks like. So I'm not really sure why the other item isn't showing up. There's a collection account that's supposed to show up here for you to see how that looks, but we'll see if we see another one on here. So what this tells me is we're looking at an account. So it's the home Wells Fargo mortgage. It tells me the date that the account was open. It tells me the last reporting date. So if you look at payment history right above the number 24 there, you'll see the last date it reported, and all those ones mean they have been paid on time. And then down below, you'll see all the different payments, and as the debt has been reduced, how that works. That's what it shows you. It shows you here underneath it, we have another account, a credit card account. So this person is only an authorized user. So the thing about authorized users is as long as the account is good, it's going to show. And you'll see all those ones again. You can see it tells me the credit limit. It tells me the current balance, tells me current payment, tells me when the card has opened. So it's been around for a long time, this account. So it's a long historical account. Here's the thing about authorized users is that as long as the account is good, you're good. The second the account goes bad, guess what? It goes bad for you too. So it's really important when you're an authorized user, if you're an authorized user simply to establish, make sure to establish your own credit, get the user. If it's your significant other's card, just kind of make sure things are on time, payments are made, things like that. So as you can see here, it just shows all the activity going on, things like that, the revolving credits. And you just want to make sure that things are staying on track. You want to make sure there's these ones here, because the second this number starts changing here, those ones start changing to 2, 3, 4, 5, 6, or 9. That means the account is done. That means we have some work to do there. So you're going to see a little bit Hollywood magic here. I'm going to go ahead and switch back to the PowerPoint where we were. And let's go back from current slide. So we've walked through that. We've talked through it a little bit. And things to do if we don't have any credit. So if we don't have any credit, there's a few ways to establish credit, or if we're rebuilding credit. So whatever accounts you do have, pay them on time. On-time payments really do help. If you currently don't have a bank account, opening a bank account does help you establish some credit. Also, some banks have programs to help reestablish or establish credit. It's something you can talk to them about. Secure credit cards, there's a lot of good secure card programs. So basically you would put a $200 deposit, you would have a $200 credit line, and you would sort of build your trust with that company from there. So as you use the card, pay it, use it, pay it. And I usually advise people that for credit cards, you want to use it, pay it, use it, pay it. Because I have a lot of people that have credit cards and they don't use them. So if you have Netflix, if you have things like that, use the card to pay the Netflix, pay the card off, and you've now killed 2 birds with 1 stone. So that's your fun tip for today. Limited use cards, American Express, Chase. So limited use cards are whatever you charge on it, that is what you'll owe at the end of the month. So it's really important that if you get one of those cards, you have the ability to pay. Authorized user, we did touch on that. So if you are an authorized user on something, make sure you get off as soon as you establish your own card. You don't want to stay on there, because if something goes south with that card, that will impact your score as well. So, will my credit mistakes haunt me forever? So, if you have positive accounts, even if you have a collection account, you paid it and it closes as a positive, it stays, it shows positive. Negative accounts do stay for 7 years. So if you have collections, they do hang around. Bankruptcies, as we stated, 10 years. Judgments, 7 years. Federal judgments, 10 years. Student loans, if you have defaulted or gone into delinquency, they're there for 7 years plus. Inquiries are usually there for a couple of years. Sometimes they fall off a little sooner, but that's the average amount of time that they will. So what can you do today to make your credit better? One, we need to review your credit. Go to annualcreditreport.com. Annual credit report. I can't emphasize that enough. You can obtain your free credit report. It does not give you your scores, but at least it tells you what's on there accurately. Very important to know what's on there, what's being reported, making sure all those accounts are yours. Create a monthly spending plan. So budget, budget, budget. So that way, if you want to start settling with some of those collections to clean up your credit, you can sort of budget and figure out what you can afford to take care of those kinds of things. Also, if there's any inaccuracy, if you know the account is yours, find out the status of the account so you can settle it. Disputing the account, all it's saying is, I'm disputing the account. They will verify that it is your account, and then it just kind of hangs out there. Figuring out how much credit you can afford. Just because you have a $10,000 limit doesn't mean we should use it all. Making sure we stay within what we can afford and we can pay back. Being motivated. So just because you have credit that's not, quite attractive for lending right now, don't let that be a deterrent. Step by step by step will get us there. So we can do this. And we can help for free. Just a little fun fact here at VCCDC, we do help with these. So feel free to give us a call. Feel free to email us. Feel free to go to our website and you can sign up for an appointment and we'll happily walk through. I did have a client who said he wanted to work on his credit before he came and worked on his credit with us. I mean, I kind of get it. It's sort of like cleaning your house before the cleaning lady gets there. I get it. But we're happy to help you with it regardless of how bad, how raw it is. We're here to help you be better. What else do we do here at VCCDC? Well, we do education. So if you are looking to do a home buyer workshop, you do not to do a workshop. You simply have to want to yourself. They're free. We talk about tacos in it. We do a workshop. So we do our post-purchase workshops. Those are available for anyone. So even if you're not a homeowner, you are welcome to attend those workshops. They are free. Currently, they're being offered online, so you can go to our website and check it out. We offer our financial coaching. So just to clarify, financial coaching does not mean I'm going to teach you how to invest into Robinhood or which stocks to own and sell. Financial coaching means I'm going to help you figure out your budgeting, how to track your current expenses, and what you can do to sort of get your finances into shape in the sense of the day-to-day. So we help coaching for home buyers, so helping you prepare for home ownership, working on your budget to help you create savings, working on credit, things like that. If you're a homeowner and you just want to kind of stay on track, life changes happen, we're here to help you. Foreclosure. So if you know anyone who is possibly facing foreclosure, possibly default, don't keep us a secret. Feel free to share us with your friends and family. Anyone who's a little older in life, who's now ready to do some reverse mortgage or would like more information about reverse mortgaging, it's not what you think it is. Also, rental counseling. So if you are looking to rent or you're kind of struggling in rent and you just can't get your budget on track, well, we're here to help you figure that out. Also, VCCDC offers a few other things, and what a lot of us come to, our lending program. So first-time home buyers, FHA, Cal loans, VA loans, specialty loans. So there are some different programs for that. Down payment assistance programs. So these are continually changing, but there's always some kind of program available. Current programs, the Cal Home, up to $35,000. Here forward, so those are people impacted by the Thomas Fire, $100,000. Bakersfield and Ventura County, Hope to Home is $23,000. CalHFA is 10,000 currently. And don't feel like because you make a moderate income that you may not qualify. You never know until you ask. You don't know what you don't know, and you won't know till you ask. And I always tell people it never hurts to ask. Always ask about down payment assistances, because every dollar that can help you get in a home is just one more dollar to help you get closer to that dream. So don't feel that's a deterrent. Questions. So we did have some questions come in. Let me go ahead and get one of those questions. So one question is, what is considered good credit, and what can we do to establish good credit? So good credit is basically, a score of 640 and above. That's kind of, if it's for lending is what they're looking at. Lending is what they're saying. So 640 and above is kind of what they would like. 660 is a little more attractive. And obviously anything higher than that is better. What you can do to get your credit good is, again, whatever accounts you have, let's start making them on time. Let's start chipping away at some of those old collections, and let's really know what's on our credit. A lot of people are scared to look at it because they're like, oh, I haven't looked at my credit in a while. I haven't done. Don't be afraid to do that. Don't be afraid. And if you need a little help, feel free to schedule an appointment with one of us coaches. We're happy to help you through that process. How can we fix credit? Well, it depends on what fixed credit means. For some people, it's simply establishing or using your credit. I tell people, if you have credit, use it. It doesn't mean go wild at the mall. I tell people, if you have a credit card, spend 10 bucks, then pay it off. Spend 10 bucks, pay it off. It doesn't have to be a significant amount, but you do have to have activity, sort of like my diets. I'm not going to lose weight sitting down watching someone on TV work out. I actually have to get up and walk around the block once or twice to get some progress. So same thing with credit. We have to have some activity to get some results. So just think of it that way. Why is credit more important than income? It's not. They're both equally important. Credit, what it determines is the percentage rate of home. And if you're paying 4 or 5% for your loan for your home, that's not really going to afford you a whole lot of home. Kind of like the car. We can pay the $200 for the Sentra and be done paying it a lot quicker, or we can have a $500 payment for 6 years on that same car. So it's really, you're paying all that money extra because we didn't have the right credit scores. Or we could be paying $200 for 3 or 4 years and have that car paid and clear pretty quickly. So same kind of a thing. Income is just as important. So making sure that all of your income, all of your I's are dotted, T's are crossed, things like that. But if you have more questions, like I said, feel free to contact us, give us a call, come see us. And we are happy to help you get credit ready. So if you have any more questions, you are welcome to us. We are happy to have you, and look forward to seeing you soon.